Alright everyone, welcome back to the channel for another Bitcoin update. In today's episode, Amazon Fractal, we're specifically going to be comparing Bitcoin's correlation to Amazon back in the 2000s, comparing the bull run that Amazon and tech stocks had back in that time, and looking at what Bitcoin is doing at this moment in time. But to start off with, I'm just going to give you a quick update on some of the lower time frames, give you a new piece of TA, and also just update you on what we've previously been talking about. So let's jump right into today's episode. Right off the back, I did just want to let you know that the hidden bullish divergence on the 1 hourly time frame is still playing out. I'm really not going to talk about this too much because I made a full in-depth update about this yesterday, Bitcoin Battle of Divergences, and really nothing's changed since then. We've moved our trend line over a tiny bit. We were at a uptrend like this, and we have moved it over to this because obviously, you know, it doesn't really matter if the trend line that we started with was invalidated. All that matters for the lower time frames for the hidden bullish divergence to be playing out is for the oscillator to be making lower lows while the price action is making lower highs. And this is still exactly what we are seeing over on the BTC USD pair in the lower time frames. It does kind of look like we are having a rounded top, and I will also present this data in a slightly different way as we do jump over to another chart, but right off the back as well, talking about divergences, the hidden bearish divergence on the daily time frame is also still playing out. So like I said, I made a full in-depth update on what to expect and all the price targets of this. Really just letting you know, this hidden bearish divergence, this is obviously playing out in the daily time frame. This is much more important than what's happening on the 1 hourly time frame. So once again, take the hidden bullish divergence with a grain of salt until the hidden bearish divergence on the higher time frames is invalidated. And this will not be invalidated until 23,400. Now, if you do want all of my price targets and what I think will happen after we do this, because like I said, I will have to switch short-term bullish if this does get taken out. If that never happens, I never become short-term bullish. If you do want all my targets for this, be sure to check out the Bitcoin Battle of Divergences video, and also the macro perspective. But with that being said, just wanted to give you a quick update that the divergences are still playing out. The bear flag that we talked about previously, we actually trolled you with this one on the previous update, and we were saying, you know, this is a bull flag, looks really bullish. Then we obviously flip back to reality, and as you can still see, we are still in a pretty nasty bear flag to the downside right now. I'm going to clear up this chart because I do want to use this chart to display an interesting fractal before we do move over to the Amazon fractal. But let's use up this lower time frame chart so I can get rid of this very quickly. So we talked about what was going on in this lower time frame, talking about how this is looking like a rounding top. But if we clear up some of the data on this chart, what you can actually see is this looks very reminiscent of a BART pattern. Now, this would be your neckline down here at 20,500. And in the higher time frames, you know, if you do come down to 20,500, you're going to be completely wiping the floor with the hidden bullish divergence. And we also talked about this in yesterday's update, the macro perspective, but just letting you know as well, if we do come down to the neckline 20,500, we're basically going to be invalidating all of the bullish market structure that we've just been doing in the past couple of days. So right off the back, why does this matter? Because at this moment in time, you can see this does look like a rounding top over on this chart. This also is a Bart Simpson pattern where you've seen this. Yeah, let me make sure it's yellow to obviously display Bart. You've had this massive run up for the head. You've got, you know, 1 spike, 2 spikes, 3 spikes, 4 spikes, 5 spikes, 6 spikes, and in my opinion, you know, I really don't see this going on for too much longer. Maybe we could M out and display a 7th spike before having a major capitulation. Now, if you're new to the channel, warm welcome. You might be looking at this and not hearing of Bart Simpson patterns before and thinking this is an absolute joke, this is a meme, but I'm telling you, if you go back to the Bitcoin market structure and look, you will see, you know, if we put this over on the inverse chart, these Bart Simpson patterns happen time over time again. Look at this massive run to the upside, spike, 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 and then you'd be like, there's no way you're going to come all the way back down to the neckline. You came all the way down and you overshot it. And you can see here, this I imagine this Bart Simpson pattern would have looked better if we're looking at the 5 to 10 minute time frame, because you've got a lot of spikes. But we do see these patterns play out time over time again. They normally play out over on the higher time frames. So bear in mind, when I'm looking at this on the 1 hourly time frame, I'm sure if you really try, you can go back and find multiple examples of where you've had these Bart Simpson patterns play out time over time again. I mean, you can even see here over on the previous all-time high, you know, you can't just say this is a head and shoulders pattern, but we do these Bart Simpson patterns where you have a massive run up on the neckline, and then a massive run up for the head, and then come all the way back down for the neckline. We do this time after time again. It is absolutely nothing new into the crypto market structure. So would I be surprised if this Bart Simpson pattern plays out on the lower time frames? Absolutely not. In fact, I find that this has a high level of validity, and we previously looked at the momentum indicators in some of my previous videos. I don't want to dive into that specifically for this video, but we did talk about this once again in the Battle of Divergences. Nothing has changed from there. I would just like to let you know that the momentum is absolutely subsiding right now. It doesn't really matter if you're looking at the money flow indicator, the RSI, the squeeze momentum indicator, the MACD. All of them are either very oversold, or, you know, for things like the squeeze momentum indicator, if you look at the daily time frame, I mean, they're completely stagnating. The 4 hourly time frame for the squeeze bomb is heading to the downside, basically displaying that this Bart Simpson pattern should be rolling down very soon. The relative strength index is very overbought right now. It already headed up and had a double top at 75. And if we look at the money flow, the money flow is completely overbought right now. So I know I said I'm not going to be looking at these momentum indicators, but you know, why not just spend 10 seconds just running through these quickly. As you can see, basically no momentum coming in over on the squeeze bomb. You can say, you know, this is the start of a trend. I'm being too harsh on this, but if you do look, we've had 3 days worth of momentum on this. Typically when you have these big runs to the upside, it really only takes like 2 days or so for you to know that you're going to have a big uptrend. I mean, look at these 2 dailies here. I mean, if I mark a horizontal ray where you had your first 2 days of momentum up here, you can basically see, I mean, we're 3 days in and we've had nothing like this. So I do think we're getting ready to roll down. Like I said, on the higher time frames, there's literally no momentum coming in right now, and we are really stagnating. And then in the lower time frames, you are losing all momentum. You're extremely overbought. Retail money has absolutely flown into this market, and subsequently, I find a high level of validity when we are talking about this rounding top. When we're talking about this hidden bearish divergence playing out on the daily time frame, when we're talking about the Bart Simpson pattern and the momentum indicators, I think tying this all together, everything is looking pretty bearish in my opinion right now. But once again, in the short term, I will have to flip short-term bullish and take out my bearish bias as we do come up and invalidate 23,350 approximately. If that happens, hidden bearish divergence on the higher time frames will be invalidated, and subsequently I can imagine that the hidden bullish divergence on the lower time frames would have played out. It's very mind-boggling having to say hidden bullish, hidden bearish, hidden bullish, hidden bearish when we are going through them, but nonetheless you get the gist. So with that being said, let's move over to the fractal in the price action for Bitcoin at this moment in time. I want to talk about the market sentiment and what I see, you know, for example, over on crypto Twitter at this moment in time and crypto YouTube, and then we're going to jump into the Amazon fractal as promised. So at this moment in time, I'm seeing it all over my Twitter. I'm seeing it on crypto YouTube. I personally don't watch other crypto YouTubers, but for some reason, YouTube just decides to recommend me like crypto videos, even though I'm not subscribed, even though I don't have notifications turned on for any of these YouTubers. For some reason, YouTube just likes to slap them in my feed, even though I'm definitely not interested. But nonetheless, the market sentiment has once again switched extremely bullish at this moment in time. And this fractal that we've got, I'm going to be talking about it in depth in a second. Let me draw the lines for it first so you can see. Basically, if we draw this on the daily time frame, you can see that we had a, what was it over here? We had a bearish pennant playing out up until this moment in time. if I draw the trend line for this, I'm going to remove this after a second. You can call this an asymmetrical triangle if you want. We really only need to focus on the triangle pattern for this. But you can see at this moment in time, we're doing almost the exact same thing. I take that back. We're not doing almost the exact same thing. We are doing the exact same thing. You've got a minor drop, bounce, then you have the capitulation. Minor drop, bounce, then you have the capitulation. With both of these, you form an asymmetrical triangle. You have a big bounce off the bottom and you spend most of your time lollygagging at the top of the trend. Big bouncer on the bottom, spend most of your time lollygagging at the bottom of the trend. What do you do after that? After lollygagging at the top, you come down and backtest support, solidifying this upwards sloping trend line. What do you do over here? Break down, solidify this upwards trending trend line. That was a mouthful. And then you break up to the upside towards about 70 to 80% of the apex of this asymmetrical triangle. You did this here and you did this here. These are the exact same patterns playing out time after time again. What happened once you broke to the upside of this? Basically, the RSI was heavily beat down and then it managed to move back up to the heart line round about 51, 52, where we created a double top formation. Basically what happened is you had your first major leg to the upside and then you started to round down. You came back and back tested the trend line as support before having another massive run back up to the upside. This is once again when Moon Boys were getting out of bed. We solidified an M pattern breakdown and we came all the way back down to the bottom of this fractal, playing out this failed move equals a McDonald's M pattern in the opposite direction. So basically a failed move equals a fast move in the opposite direction, but you had an M pattern to the downside. And I really would not be surprised if we're going to see the exact same thing potentially play out. Maybe we won't go down to the bottom of this trend, down to 19,700. Maybe we could do something like this where we come down to 20,600, 20,500. So we don't, technically speaking, if you start taking out 20, you would need to come down to 20,200 to completely wipe the floor with this hidden bullish divergence. But you can imagine if you come down to 20,500, 20,600, you're probably going to struggle to keep this playing up because the RSI is probably going to fall through the floorboards on this, and then that is where you're going to see the hidden bullish divergence get invalidated in the lower time frame. So I really do think that a fractal like this is going to play out. Now, we've talked about the fractal in terms of the technicals. We've talked about the fractal playing out that is basically, once again, I take that back, not basically, this is the exact same thing as we saw previously. We're seeing the same over on the oscillators. You're coming up to that heart line, and once again, you are struggling as you are approaching the heart line of the relative strength index. Now, let's talk about the market sentiment, because the market sentiment is also creating a fractal. Now, if you look at what was happening with crypto Twitter, specifically for me, like I said, I really don't watch other crypto YouTubers. Occasionally I'll watch a Ben Cohen video. I think he's one of the only respectable YouTubers out there. There are some others, not throwing shade on anyone, but for me personally, I really don't have time. I don't watch other crypto YouTubers. I like to create my own opinion. But if there is anyone out there, or if there is any YouTuber out there that I would give some kudos to, it would either be Ben Cohen or the Orange Pill podcast. So going off topic, but nonetheless, those are the only two crypto YouTubers that I am even remotely interested in their opinions. But nonetheless, let's get back to what's at hand. I want to talk about the fractal in terms of the market sentiment. So you may remember what happened when we broke down into this bear flag, or bearish pennant rather, asymmetrical triangle, whatever you want to call it. We broke to the upside, Moon Boys got completely out of bed, and as we were approaching this $32,500 mark, absolutely everyone was saying the bull market is back. We are going to crazy high levels. What price are we breaking to the upside right now? So right here was 32, let's just say 32,500, just to make it simpler for us. And then what price did we come up to here? 32,500. So the market sentiment is just as bullish as it is yesterday and today at 32,500 as it was all the way back down here a month ago. This was 39 days ago, or 40 days ago approximately. 40 days ago, the market sentiment was just as bullish as it was today, and 40 days ago we were at 32,500 people getting out of bed then, and today people are getting out of bed for the move down to 22,500, a whole $10,000 drop to the downside, and the market sentiment is exactly the same, which is hilarious to me. I tweeted this over on Twitter, but it's just insane to see. You have a 10-15,000 drop to the downside, you move up 5 grand, and everyone's like, the moon is coming, the moon is back. Everyone's getting out of bed, everyone's throwing themselves out of bed, but the market sentiment is creating this perfect fractal. The price action, the technicals are playing this perfect fractal. Even the oscillators, momentum indicators, I'm not going to pull up the momentum indicators and drag this video out. They are the exact same, but let's just look at the RSI. I mean, once again, you came up to the heart line and you topped out, just like I imagine we will be doing over here. But once again, I will be keeping you updated on the lower time frames, the higher time frames. I do not think this bullish hidden divergence will be playing out on the 1 hourly time frame. I still have my money where my mouth is. I am bearish in the short term until 23,300 breaks. And once again, if you're new to the channel, I should probably state this. You may be thinking, I'm just waiting for the exact bottom to buy the dip. That's absolutely not the case. I've been saying I have been religiously buying the dip in $1,000 increments since 25,000. So we came all the way down to 17,600, which means that I bought the dip at 18,000, 19,000, 20, 21, 22, 23, 24, and 25. And I will continue buying the dip as we get down to these lower price targets at 17, 16, 15, 14, even if I don't necessarily think that they're all going to get hit. So I have been dollar cost averaging below 25,000. I just do not believe the bottom is in, and subsequently I'm leaving about 75% of my capital to the side. With the amount that I have been buying the dip with recently, it's just been 20-25% of the money that I have, and once again, I've still got a large amount of my capital to the side, waiting for 16,500 to 14,000. So as you can imagine, in the lower time frames, it looks like we're getting ready to run to the downside. We have little to no momentum coming in right now. The higher the time frame you go, you can see the more overextended we are. And once again, if you do look at the weekly time frame, you can actually see that we are heavily beat down. What I'm really referring to is the daily, the 4 hourly, and the hourly. On the weekly time frame, it is looking like we are approaching a bottom, and this is of my opinion as well. I just do not think the bottom is in. I think one final capitulation and then the bottom. So we talked about the lower time frames, we talked about the hidden bullish divergence, we talked about the hidden bearish divergence, we talked about the fractals in terms of price action, technicals, and market sentiment, and then we talked about the rounding top and the Bart-Simpson pattern. Now let's get into the bread and butter of this video, and this is where I want to just very briefly, because we don't need to overanalyze this chart. I think you can look at these two charts and it speaks for itself. So once again, this is going to be a smaller segment of this video, but let's talk about Bitcoin's correlation to the Amazon fractal, where Amazon had its massive capitulation in the year 2000. So as you can see, Amazon went from about $5.67 all the way down to its bear market low at 27% before it went on a massive bull run. And as you can imagine, Amazon has been on an absolute tear to the upside, and this is really what I think Bitcoin is going to be doing in the next 10, 20 years or so, and that might seem like a long period of time, but bear in mind these fractals are very similar, and this was over the year 2000, and at this moment in time, it's been 22 years, and this is how long it's taken for Amazon to go on this massive parabolic run. So little by little, drop by drop, I do believe over the years Bitcoin is going to be going on a massive run to the upside, just like we've been seeing over here. So let me bring that back. As you can see, like we said, Amazon had a 95, oops, wrong chart. Amazon had a 95% drop to the downside, coming into the bear market that was induced around about December to 1999. So first of all, am I saying Bitcoin's going to have a 99%, 95% drop? No, I don't think Bitcoin's going to have anything like that. I think the markets are more mature and they definitely don't need to play out exactly as they did before. However, once again, before we draw any lines on this chart, just look at these two charts. Once again, they absolutely speak for themselves. I really don't need to draw a bunch of lines on this chart for you to just look at these and think, you know, these are pretty much the same chart. So let's jump right into this. First of all, what you have when we are looking at the Amazon chart is you've got this big old, you've basically got this breakdown into, you know, the levels that are down here. You have a massive run to the upside. You have a massive capitulation before you come up to the top. And what do? You have, once again, another run to the upside before creating a pretty perfect double top structure. Now, if you want to draw it for the candle body closes, I'm sure you could make an argument that this is almost a triple top structure. However, the double top, both on the candle bodies and the wicks, looks absolutely beautiful in this. So you've got a breakdown into the year or so before you have this massive bull run. After that, you have a massive run to the upside. You take a massive breather to the downside. You run up for the last leg, break down, have this spiky top formation, and then you have your 1, 2 double top formation before pretty quickly running to the downside with almost no breaks. And that is exactly what we're seeing over on Bitcoin right now. Just like down here, where we were talking about the capitulation, you know, you've got this capitulation event, massive wick to the downside. This is what we saw over here, massive wick to the downside. Then you take a pretty prompt run to the upside. You take a breather for a short period in time before you do reach the top. And once again, this breather before you do reach the top was right over here for Amazon. So already right off the back, you're seeing these crazy similarities. And then let me clear this up. You have a run to the upside, you have a 1 top formation, massive dip to the downside, and then a double top formation, which is basically exactly what we saw over here. But bear in mind, let's actually measure it first, because I think we've elongated this chart, so it may seem like these are slightly out of pocket to compare to, but what did Amazon have? It had a 63% drop to the downside, and Bitcoin had a 55% drop to the downside before coming up and making a higher high. So what did Amazon do when we had this double top formation? Was it a double top, or did it make a slight higher high? Well, you can actually see Amazon made a slight higher high from the levels of 551 all the way up to 561. Just like Bitcoin had a very slight push to the upside. You can see from the previous high up to this new high, this represented about a 6.4% increase. Now, if we do look over here, you can see we actually, once again, I'm using the wrong tool, we had about a 2% increase. So, you know, once again, I've fat fingered it a tiny bit. So once again, take this with a grain of salt. We're not trying to find the exact, you know, percentile point increase, but we are just pointing out the similarities on the higher time frame. So as you can see right off the back, these two charts look so similar. They've got the exact same market structure. So what happened after Amazon had its top? Well, we talked about this before. We had a 95% capitulation that was very quick to the downside. And you know, of course, you had these bounces on the way to the upside. You know, you had 77% pumps, you had 113% pumps. Even here, you know, you had 124% pump, and I can imagine, you know, I was not old enough to be trading these markets back here, so I cannot tell you what the market sentiment was back then. I'm not even going to pretend to imagine like I knew what the market sentiment was back then, because I was probably, you know, a child playing with a Nintendo DS back then. So I didn't know anything about Amazon stock back then. So all I can do is look back at previous trends. If you were back in this market structure, then leave a comment down below and let us know what it was like. But once again, you're seeing the exact same thing over here on Bitcoin. And there's actually times where Bitcoin is more euphoric than Amazon, and there's times where Amazon is more euphoric than Bitcoin. For example, you know, the run to the upside within this market structure from 6 cents in a couple of years all the way up to $5.71, Amazon was more euphoric than Bitcoin back up to the upside. When Bitcoin put in that you know, the higher high, it was, I don't want to use the word euphoric, because, you know, I wouldn't consider a 4% differentiation between the two of them euphoric. It had a slightly higher run to the upside, and once again, Amazon was more euphoric to the downside, and Amazon had these more euphoric swings because it moved so fast to the downside after moving so quickly back up to the upside. You saw multiple times we had 77% increases, 112% increases, 124% increases. And there was a multitude of these times where people thought the bottom was in. But I specifically want to focus on this on the most recent probably isn't the right word to use. The capitulation before the final capitulation. Let's call it that. So you had basically this massive capitulation. This was the biggest bounce back to the upside. And then you had the final capitulation. And in my opinion, Bitcoin is in a scenario like this where, you know, we've seen these bounces back up to the upside. You know, we've had, you know, 23% bounces back to the upside. We've had 47% bounces back, 47% bounces back to the upside. We've had 21% bounces back to the upside. I think, you know, I don't necessarily think that we're going to have a big run to the upside like Amazon did. However, you can definitely see, you know, if we do play out a fractal like this, we actually had a range of support for Amazon right here. And if we remove this, you can see on the bounce, we bounced right back into this range. Now, if we do look at this range for Bitcoin, which once again, just because we're comparing the similarities between these two, does not mean they have to play out to the teeth. So if something like this does happen, the same fractal as we saw over on BTC happens over on, you know, the same fractal that we saw on Amazon happens over on BTC, you could potentially see Bitcoin push up to, you know, 28,500. If we come up to the heart line where there was a bunch of support in the middle, just like there was a okay amount of support in the middle over here, you could see moves back up to 36,000 before you do have that final capitulation to the downside. And bear in mind, I really think we do need to put this in perspective, because when you do zoom out, you can see, you know, you can definitely draw something like this, and when you're looking at the chart, it would not seem far-fetched from belief. And when you are looking at it in hindsight, you can definitely see that a move like this would definitely not be anything reminiscent of, you know, changing the higher time frames. If we do move up to, you know, 34, 35, 36,000, we could definitely roll back to the downside. Now, one clear differentiation between the two of these is, you know, the economy was in a slightly different state as it was back over in the year 2000. So, you know, if we are about to enter, you know, a recession, you know, there's a lot of other geopolitical news that I don't necessarily want to get in for this video. I'm a cryptocurrency channel. I'm not going to talk about politics in this, but nonetheless, there is a lot of geopolitical stir. There's a lot of crazy things going on in the world, in the economy at this moment in time, that are definitely different from what we saw back in this time frame. So where do I think we are for Bitcoin? I think that for Amazon over here, when Amazon had its final euphoric bounce and then it had its final capitulation to the downside, I think we are right here, right now with Bitcoin. I think if the top is not already in for Bitcoin, Bitcoin has a tiny bit to run to the upside. Maybe it will come up to, you know, 23,000 or something, and this could be a level where we could still pump up to without invalidating the higher time frame hidden bearish divergence, and then we could see a move back down to the downside. Once again, I'm drawing this as the line of best fit, so when I have drawn this down to 8,000, I wasn't looking at the price. If I had to, you know, if you pointed a gun at my head and said, you know, draw it exactly how it would play out, otherwise you'll die, I'd probably draw something like this, where I draw it down to maybe 14,000. You know, the worse and worse the economy gets, the more likely I feel like 14,000 is on the table. But if you know me, if you're a veteran of my channel, you know that I've been saying I basically have almost all of my buy orders at 16,500. Yes, I have a large amount of my buy orders, about 20% out of that 75%, around about 14,000, and I've got about another 10 to 15% of my capital below 14,000 in, once again, $1,000 increments down to 13,000, 12,000, 11,000, and even 10,000, and even 9,000. Now, do I think 10,000, do I think 9,000, 11,000 is going to play out? Absolutely not. I do not think that's going to happen. But nonetheless, if I've got capital on the sidelines and I do not set buy orders down at 10,000, 11,000, 12,000, and we do have a massive liquidity grab, potentially even a liquidity crunch, you know, based on what I was talking about in my previous video. This is one of my most important videos that I made, Bitcoin liquidity crunch. We don't look at technicals. We talk about a bunch of definitely worrying signals that I think any crypto investor should definitely be privy of. In my opinion, we are about to witness a massive liquidity crunch in the cryptocurrency ecosystem. If you want to learn more about that, and even if you don't know what a liquidity crunch is, I will explain everything in that video if you are interested. So nonetheless, I do believe there are a lot of similarities playing out with Bitcoin and Amazon. You have to also remember that these are both tech stocks. Back in the day, when people were looking at Amazon, people said Amazon was not going to be a thing. You know, people were fudding Amazon the exact same way they are fudding Bitcoin. You know, people might think, you know, why is Amazon and Bitcoin so highly correlated? They are both tech stocks. They were both ahead of their time. At this nascent period, Amazon, other tech stocks, you know, coming into the early 2000s, witnessed a massive parabolic run to the upside. They witnessed unprecedented growth, and subsequently they had to experience a bubble that had to play out for the market to continue to move to the upside in the higher time frames in a healthy manner. And I think that is exactly what we are going to witness over on Bitcoin. I think the similarities between Bitcoin and Amazon, not only from a charting perspective, but from a fundamental perspective and a historical perspective, are very, very similar. So that was the video. I hope you did enjoy it today. I hope you found some value in today's content. And once again, I hope this did provide an alternative perspective. Part of the reason why I did make a channel was to provide an alternative perspective from what is the typical norm over on crypto YouTube, because I do not believe that we can just get the full picture by looking at BTC, USD, on a blank chart, drawing trend lines and looking at the RSI, which is what I find most YouTubers do. You know, they draw trend lines and they say, you know, the trend line has been broken, the moon is coming. I'm really not a fan of trend lines. I'm really not too much of a fan of just looking at the RSI by itself. I like to look at Fibonacci's, moving averages, risk momentum indicators. I like to look at on-chain metrics. If you're a veteran to my channel, you'll know by now that we do not follow the typical norm of the crypto YouTube ecosystem. So once again, if you're new to the channel, hope you did enjoy today's content and you do stick around. That is all I've got for you today, my friends. And as always, cowboy out. Peace.